Q2 earnings actually came in stronger than expected. And usually you would expect a positive market reaction. But this time around, they've positively surprised on Q2, but guidance for the second half of the year has come down. And you've heard some of the interviews, especially in the industrials place, the outlooks gets more and more difficult. So what the market trades on is not Q2 earnings, but the outlook and the guidance we get. And that looks worse than before. And if you look at the price reaction, if a company beat estimates, basically the market traded flat on that day, or the stock traded flat on that day. And if they missed guidance, then it was down 1.8% on average. So it's a very asymmetrical performance on the day of performance and of reporting. And I would call this disappointing beats. We think that's a trend that will probably continue in the second half, especially for some of the industries, in particular industrials. Because if you look at sales growth, then sales growth has been negative in Q2 for the first time since 2020. And if you consider sales coming down, you can imagine that it's pretty tough for companies to cut costs to keep margins stable. So we think over the course of the year, margins will compress, and that will put pressure on earnings.
Maximilian, let me ask you specifically about one sector which has been really disappointing when you look at the absolute evolution of numbers, but not so much in the share performance, and that's the chemical sector, a major part of the German industrial complex, and it's really been an abysmal quarter for the chemicals names. But the stocks have held up fairly well in the face of these really downbeat earnings performances. What do you pin that down to? And is there any sign that we've seen the bottom when it comes to the chemicals performance?
Yeah, excellent. It's a very interesting thing. And chemicals is one of the sectors that are very interesting to watch right now. Earnings growth in chemicals has been minus 70% Q2 this year versus Q2 last year. So really bad. Surprises were even worse than expected. Nonetheless, as you said, price performance was flat. And that's quite different to what we've discussed just a minute ago. And I think that's because it's a short cycle industry. It's not an industry where you have huge backlogs, where you have order intake, where you can see where orders are going to go in 6 months. It's what you get right now. So it's a good reflection of the difficulties we're currently having in some of the regions that are big consumers of chemicals.